What's up, everyone? Welcome to WildinStockTips. I'm Ryan. I'm 23. I'm going to be showcasing a live demonstration on what I screen for when looking for stocks. So, I haven't done too much preparation for this upcoming week. So, I decided might as well do it live and show you what I'm looking at. So, based off of last week, the first thing I'm considering is bond yields are pretty high, so more expensive to borrow money. Could signal stickier inflation. Um, could also mean a more bullish market is gonna occur. However, if there's investors that can get a 5% return on bonds, it could potentially limit the amount of money going into stocks. So I'm watching this very closely and gonna be a lot more cautious. I'll make another video on this probably in a few days, but this is gonna be core stocks or quote unquote safer stocks that I'm going to be screening for. I usually try to keep 60% into core stocks and 40% into satellite stocks. So this is going to be what I'm looking and screening for the core side of it. So first thing is I like to filter for the NYSE exchange and S&P 500 index. And then for industries, the two that I feel the safest to invest in are let's see if I can find them. I'm actually gonna cheat. I'm gonna look up. Okay. So it's gonna be farm and industrial as one of the safer sections I have. So this gives two off the bat. So obviously Caterpillar and Deere and Co. Deere and Co looks like got a pretty nice dip, but just based off of a quick overview, it's probably going to keep falling. Yeah, because it broke out of that. So it's going to retest and then keep falling. So I don't know if I would invest there. So based on only two, I'm going to do any, and we're going to go to the relative volume, and over 1.5 is what I'm going to filter it to. This signifies the just higher volume overall being traded compared to what the usual volume is for that stock. And then I'm going to go highest to lowest. So Ford's number one. Ford actually broke out, so this is one I'd probably note. And the dividend growth increased. The return on invested capital is a little bit low. But based on this bullish breakout, I would potentially look for an entry at 1450 to 1475. So that's one that I would look at. Another thing that I'll sometimes do, actually, majority of the time I'll do, is go to the financial. I thought it was in valuation, but you can look at the return on invested capital. So HP is going kind of crazy. But I feel like with this one, I might be FOMO trading or fear of missing out. Um, let's see. So this is kind of the processes. I'll just go through and I'll look, and some of them I do have personal biases to. Um, AutoZone might be a decent one in a little bit, because it could be retesting this, and I'd be watching the wedge and see if it breaks out. So what I'm also going to do is I'm going to switch from relative volume. So that just gives me an idea on the volume that's being traded. So based on volume, Ford looks pretty good in my opinion. Obviously, I will showcase more on TradingView to look for entries and maybe news just to support the move, because if there's already a lot of news out and people are going to sell on the news, I might not look into it too much. But the next one I'm going to do is debt versus equity. And I'm going to do under one. So basically, higher amount of equity compared to their debt. So HP is still up there, has a lot of volume. I'm just a little bit hesitant because it's already up 10.63%. I believe I might have to double check this, but I think Uber had they acquired some company to compete with DoorDash more nationally, so I think that's their stock's going to go down a little bit more, but watching for the dip and maybe dollar cost averaging wouldn't be a bad thing because now they're competing more with DoorDash. Nike, I'm staying away from Nike personally because with a lot of streamers and not as many sponsorships for athletes gaining traction to buy goods, I'm staying a little hesitant. And what I mean by that is Nike was really good when they were sponsoring basketball players and sports professionals. But with this day and age of streamers and social media content creators becoming more popular, I'm just a little bit iffy on Nike and Adidas and a lot of the clothing brands. So one thing I'm going to do is I'm going to go here and look at the return on invested capital. So and the reason I passed by Visa, by the way, is I could be wrong. I think Berkshire and Hathaway, they let go a lot of their Visa and MasterCard stock, so they could be wrong, but based on their track record, I'm kind of trusting their moves on that. One that looks interesting on the chart is Texas Pacific Land Corp. So I don't know much about them, so I'm going to showcase a little bit of my news research. So first we'll go to their website and we'll just kind of see some of their news. That's really good. So royalty production of 37.1 thousand barrels per day. And then their revenue is looking really good. Let's see what other news they've had. So one thing I'm going to do too is go to Gemini. So when there's a lot of specifically conference talks or news that you would need to read through a lot, I find AI extremely helpful. So my query or prompt is usually, as an expert hedge fund trader, do a complete bull versus bearish breakdown of TPL stock, Texas Pacific Land Corp. then rate based on only news in past 3 months if bull or bearish signs. So this gives it very specific instructions to look at the news within only the past 3 months. So as you can see, it gives nice, neat breakdowns. So they don't drill, they collect unhedged royalties. So when that's actually really good. So when oil prices spike, TPL captures 100% of the upside with near zero marginal cost. That's also very beneficial, monetizing acreage for AI data centers. Their PE ratio is 54 though, so not. I like to try to stay in like PE ratio of 5 to 15. And then it gives a nice, neat breakdown of potential for the next 3 months. It does, because I asked for a rating, strongly bullish. So just in this instance to showcase what I do on TradingView, go to TradingView, type in Texas Pacific Land Corp, and let me see. So I'll go to the day. Maybe I'll go to 1 month first because personally I'm okay with taking more swing trades. And then I usually also look at their price target in TradingView and then more of their technicals. So I'll go in here first. Just kind of see. So it does look like it's bullish on 30-minute, 1 hour, 2 hour, and then bearish on 1 to 5 minutes. So we'll go into the 1 day. I know I mentioned 5 day, but based on it being bearish in the lower time frames, we'll start with the 1 day. We'll go to 1 hour. And I'll sometimes draw little lines matching generally the bottoms if there's like a little channel I can make out. Sometimes there's not. So this is a little channel I see. And then there was a major downtrend. That looks like an anomaly. That's basically when was this? So this was the 7th of May. I might look into what caused this anomaly because it jumped in insane amounts. Another thing I'll do occasionally is look at the volume. So the volume, it's a little bit bearish in the short term, which again expected from what the analyst rating was saying. And then I'll look at this. This is Bollinger Bands mixed with a moving average. And then it looks at liquidity sweeps as well. This is a custom one I made. I will launch them all very shortly. So based on this, I could see it going downwards until maybe like 3. Let me see. 396 to 3. So like just under 400, and so 396 to just under 400, and I could see it potentially might go to this top of the fair value gap. So 396.21 could be an optimal retest. However, it could, based on this small, let me get my rectangle tool, based on this small fair value gap, it could retest and just keep going bullish. So we'll go on the lower time frame and see what's going on there. So it looks like it actually went below there. So another one I'd be looking at is this gap right here. And it did test into that fair value gap, and it's almost touching this Bollinger Band, so it could be, I know I said 396, I believe it was optimal, but I don't know if it'll go that low because on this smaller time frame, it looks like there's a, let me see if I can get this neater. But it looks like there's a bullish channel that is starting, so I'm going to just continue it from here. And it actually broke below there. So it very well could go to 396, which would be 396.97 I could see it going to, and then rebounding. Let's look at the 15-minute. So it did touch the top of this Bollinger Band. And then there's a gap right here that it could, I believe this is where I was seeing it on the 1 hour time frame. And this even goes as low as 390. And I will mention, timing the market is not ideal. So one way that could avoid timing the market is dollar cost averaging. So you could buy one share right here, right now, basically open tomorrow if it stays around 402.01. And then you could buy 2 shares at 431 cents. And then you could do 3 shares at about 397.33. So then your average price, this is just very rough math. I haven't done it off the top of my head, but if you dollar cost average this way, your entry price will drop to about 462, or 390, basically around this middle line. If it goes even lower to, say, like 394, you could add more as well. So with dollar cost averaging, I would recommend just doubling whatever shares you have. You can also add more shares, and that would lower your average cost of the price, or of the cost basis. And then one thing I'll also look at is I'll take this away and I'll delete these red lines and look at, where do I have it? The 1 hour VWAP. So it is staying on pretty high on the VWAP. It is breaking back down though. And then the last thing I'll look at is EMA. So this is the estimated moving average. I am going to delete this trend line. And it does show it's in a bullish moving average, so it could continue up. It did see a very bearish one, so I would be cautious with doing large portions, um, uh, large investments, not portions. Um, because it could go up to 415.52 to 428, and then it could go on another very large bearish. And this could be also extremely risky because there was news, I believe, yesterday or Friday, where the Iran conflict is basically resolved. So that could be why it's bearish on the short term. So it could turn around since a lot of their money is from royalties of oil barrels. So they don't drill for it, but it's their royalties. But this is an interesting stock to me. I'm going to keep it on my watch list. Another one I'll look at for this video is, let me do NYSE, is Ford. Because Ford was going really crazy. So this actually looks like a better entry to me, and I would be looking to enter more for a short-term trade in this fair value gap. So it did already test it. So let me see if I can find another one, because since it already tested it, it's likely going to keep going back up. So buying right here, like at its current price of $14.95, could be beneficial and yield a lot of return. I could be wrong, but I want to say that Ford is coming out with lower cost vehicles that are kind of similar to what China produces. So yeah, so it did already test that and it's breaking upward. So I would look for maybe 14.92 and do a short-term trade of maybe a week and then see what the gains in the chart is looking at. But let me see what news is surrounding Ford. So they skyrocketed because, oh wait, that was Q1. And their earnings aren't till July 29th. Oh, they have a new electric hatchback, which that could be very beneficial. Might be a little risky though, because again, it could be a sell the news type of investment. But it did break out on Finviz, where we saw it break out of that. I believe it was a wedge that was forming. So it could easily go up to a little over $15. Maybe 1666, the top of this peak, and then it could retest downward. But I would say TPL to me is more of what I would look at buying. Ford is, it might be a long term hold, but TPL is either going to go break bearish, but based on the trading or Finviz chart, it looks like it's going to be on a bull run and it might retest the 507, 508. Could be risky though because the Iran conflict is lowering. But overall, that's a little bit of, I guess, part one of how I look at safer stocks. I will dive deeper into different screeners I use, different stocks I look for. I know it was a little bit long, but kind of an unfiltered showcase of two stocks I found interesting. And I usually tend to do a lot more news research and I'll read through reports and not always use AI, especially for safer stocks because I want to continue adding to them in the long term. One I didn't mention, the one AI stock I believe is the absolute safest is Google. So Google's one core stock that I'm going to be adding to basically forever because they have an algorithm that limits the amount of memory you need by sixfold. So very interested in them. But yeah, leave a like and subscribe if you're interested. And this is part one, so I'll be making more videos.